Thank you. The Congressional Budget Office says the taxpayers may lose $36 billion on AIG, and OMB says about $50 billion. Do you have a guess as to whether or not these numbers are anywhere near accurate, or can you see a larger or smaller number?
Yeah, I mean, that's a very difficult question to answer. I think the current debt outstanding is something like $79 billion. I've come up with my assessment of what the earnings power of the ongoing operations is something like $2.8 billion a year. You could put a 10 to 15 multiple on that, add the gain that you expect on the operations that are to be sold, and you're still short of what you need to cover a loss. So in my view, it still seems like that'll be difficult for the taxpayer to break even.
If it was your job, how would you restructure AIG? How would you make it stronger?
It's probably beyond me to answer. But I would say that probably as a first step, I think there needs to be a test of what the common value, what the market price is for the common stock. The government does have the 80% ownership in the form of warrants. A public offering of part of that ownership might tell you what does the market really think AIG is worth, and that is a sort of a starting point as to where you can sort of go from there.
Do you think AIG is solvent, or is it just simply getting along on its implicit government guarantee?
I think the government guarantee is intrinsic to its ability to conduct business on a daily basis.
Okay. So it's possible, or I don't want to put words in your mouth, but I guess is it possible AIG cannot be solvent?
If the government were to walk away today and pull back all its support, then AIG
sure.
would not be in a position to be able to conduct business.
In your testimony or in some interviews, I think you said that AIG has the potential to become the government to be embarrassed by AIG. What did you mean by that?
I think I was just referencing the fact that AIG is obviously a very high-profile name. There have been other high-profile issues. The compensation for the people at AIGFP about a year ago was obviously a big embarrassment.
Okay.
And you don't want to have that risk out there.
And I'll close by just asking, what is your current outlook on AIG?
We maintain our $6 price target. We think that we're advising our clients not to buy the stock.
Is that because 80% is owned by the government, there's only 20% outstanding, and there's so much pressure that ultimately that 20% just might get crushed?
Yeah, eventually that's right. I mean, we believe that, as I said, as the government exits its position and tries to repay the taxpayer, there's not going to be a lot left for the common shareholder.
Okay. Thank you.
Thank you. Mr. Silvers?
In a way, I want to revisit my colleague, Mr. Waters' questioning in a different way. Obviously, you write analyst reports for private investors in AIG's equity in particular, sure. Who are junior to the government, right? We are talking to you about the interests of the government, right? That's the investor we represent, in a sense. So, from what you are saying, right, it seems to me that you're basically saying there's not enough earnings power or cash flow power, so to speak, in this firm to support not only the stock price as it is today. I mean, it's an astounding gap between what it is and what you say it should be, but perhaps not enough to even support the repaying the government ultimately. Am I reading back to you what you're saying correctly?
Yes, that's correct.
And AIG is currently drawing, as you point out, drawing on the government's on the Fed's line of credit, not paying down but drawing.
That's right.
Now, if you put those two things together, doesn't that suggest that from the government's perspective, not just as a senior equity holder to the common, but as the continuing source of funding, right? That what the government ought to be doing is demanding haircuts from other investors in order to get this company to function properly, or is there some other path here? Is there a way to get growth out of this firm, to get growth in earnings or in cash flow out of this firm? Is there an expectation that the market will view the underlying assets of AIG differently in the future? And I'm particularly interested in your perspective on AIG as a global firm, given what seems to be happening in the global economy right now as of today.
Well, in terms of the ability for the company to increase its earnings power or cash flow, you are in a difficult environment right now. Obviously, the global economy is not on sound footing yet. And actually, the insurance businesses are in a somewhat difficult environment as well. The property casualty business prices are going down throughout the industry. And the profit outlook, at least our view on the profit outlook for the property casualty business is not great. So the backdrop is not good. AIG, of course, is still, even in the continuing operations, under-earning what it once did. So there is always the potential to recapture some of that lost value. And I would say that the current management team seems to at least be moving towards that as they've stemmed the flow of lost employees and all. But in terms of but in terms of another route, I don't see it. I mean, I think it's a very difficult road ahead of them.
I'm sorry. In terms of another, what you don't see what?
No, I'm sorry. I thought you were asking about in terms of generating more additional earnings power.
You don't see a way to generate additional earnings power by a multiplier effect. By the way, I know this is sort of unfair, but your somewhat radically pessimistic view, does that make you a maverick, so to speak, or I mean, I just find it extraordinary the difference between a current market price of 44 and in what is an active trading market, and your view of 6.
Yeah, no, it's hard. That is, I ask myself that question a lot. I think there are a few factors. I think one, it is a complicated scenario. I mean, AIG's balance sheet is not a typical balance sheet. It does have a stated book value number of $37, $36, and that I believe is a misleading number, but it is out there. There is the underlying value of the company, right? These insurance companies, which are like I said, it's a great global franchise, and that's actually a very frustrating thing about for those who were watching the company in 2008 as well. I was an analyst then, and you saw these underlying earnings that were very strong, and you had this great franchise. It was hard to believe that the stock was a zero. There's also been a series of good headlines. But as I say, good management has done a good job, and there's been some good headlines over the last year.
If fundamentally,
yeah,
you don't have a critique of what management is doing, I don't hear one. What you basically have a critique of is that there are too many claimants on the cash flows to support either the stock price or the government's or the government getting paid back.
That's ultimately correct.
Right. Why is that not sort of a no-brainer in terms of that the government shouldn't really give this firm any more money until the existing claimants take haircuts?
I think
and what other choice do we have?
Yeah, I can connect that to the question about the stock price, because I think the bulls on the stock believe that through the exiting, the government is going to be very generous as it tries to exit its position in AIG. Whether that could mean walking away from ownership interests or forgiving parts of loans. This is just private conversations with investors.
I mean, do these people talk to their fellow citizens? Do they have any notion of what would occur if we started handing out public money to the private investors in AIG in that way?
That's the argument. And to be fair, I think the reason that they might hold that view is that the government has been generous to AIG already, right? Taking the TARP debt, which had an interest payment attached to it, and shifting it to a preferred status that's non-cumulative. Very generous act. Interest rates have been changed for the company. Government owed debt has been moved from AIG's balance sheet into off-balance sheet vehicles, which has lowered the amount of debt that AIG itself owes, but with only a fraction of the result actually ending up back in the taxpayer's wallet. So I think there's reason for the investors to think that perhaps that will continue.
Thank you.
Thank you very much, Mr. Gallant.